Talk some more about how retailers are dealing with some of these tariffs. Joining us this morning, Fubu founder and CEO and Shark Tank investor Daymond John is with us, along with CEO of supply chain company the Atlas Network, Kareem Kaffouri, here at Post 9. Gentlemen, good to see you both. Thanks for the time. Daymond, I'll start with you. We actually have some Fed officials right now on the tape saying that the margin pressure from tariffs is still to come. I wonder if that's what you're viewing from where your perch.
Yeah, we are seeing that the margin pressure is going to come. It is 100% the gray area, and people just don't know how to predict or project their spending, whether it is retailers, who's going to come in, whether it's the everyday consumers you just touched on, and of course, the manufacturers. How do they price these goods in? What's going to happen? I mean, this is going to hurt a lot of people. It's expected, but we just don't know how big the hit's going to be.
How would you explain your sort of operational strategy then, given that we've already seen a fair amount of front loading to what we thought was going to be a deadline?
That's exactly what's happening. People are front loading right now. However, they're looking for other ways to source goods in closer countries and territories, especially in America. But the challenge with that is a lot of the domestic manufacturers themselves are raising their price. And now you're going to be caught on the side of, if you are importing it, or you're going to be caught domestically. So no matter what, it's a hit. And who's going to pay for the hit? It's going to be the consumer, because at the end of the day, you can't stay in business if you're not making the proper margin or profit. So the ones who can't keep up, they're going to, many entrepreneurs know, they're often paycheck to paycheck. They're going to fold. And then you're going to have to pass on that, that increase to the consumer at the end of the day.
Kareem, is there a safe place outside of the U.S. To establish manufacturing plants or to kind of re-divert your supply chain? I remember just a few months ago talking to some executives off the record, and they said, well, China and maybe Southeast Asia looks like less promising, but Brazil, that's going to be where you're going to see people kind of re-divert their supply chain. And then, of course, overnight, we see, news about potential 50% tariffs there. So I'm just curious if there's any area that you think would be kind of a safer place if someone's going to spend, $1 billion to restructure their supply chain.
I think it's industry to industry and product to product, to be honest with you. And this is something that needs to be looked at very carefully. When businesses are looking to accommodate these tariffs or work within them, there are really 5 major areas they need to consider. There's absorption, there's deferral, there's pricing, terms and conditions, there's cost engineering, and then there's alternative supply chains. To do an alternative supply chain is not an easy thing. You need to look at materials, output, resources, technology, and finally the costs. So really, your best bet is to try to work with existing successful supply chains, regardless of geography. This is the most efficient outcome when we look at the process from end to end. However, if I was to look at some areas in the world, I would absolutely be looking at places like Africa. I think Africa is an amazing opportunity, resources, capabilities, technology, manpower. I think it's a great place. I think South America has major opportunities as well. And so, if you are going down the path of looking for alternative supply chains, which is something that everybody should look for at any time in supply chain, because it's this up and down game of controllable and uncontrollable factors, you need to consider all of the factors in general, and industry to industry, product to product.
But how should companies be thinking about, just given the uncertainty and given that the news can change on a daily basis? I mean, is this the right time to be changing your supply chain, or do you see down the future more clarity that would allow people to actually make those decisions?
Again, I think that the supply chain moves slowly enough, 6-month to year-long intervals for most businesses, that to make any erratic decision is something that could fully disrupt the business. So with this in mind, you need to try to accommodate and work within the constructs of what is currently happening. If you have the ability to over-order products, like, for example, during that 90-day pause, many businesses were really over-ordering for future quarters. If you're able to consistently be looking for alternative supply chains or opportunities or ways to absorb or defer the tariffs or cost engineer your products. Sometimes in the face of chaos, there's opportunity that comes about where you can re-engineer a product to offset the cost of those tariffs. So all of these are manners that need to be considered, I believe.
Daymond, there was some discussion this week about, these moving deadlines and sort of the postponement in the hopes of additional deals. Maybe now late enough to where holiday inventory can be saved, quote unquote. In other words, did these moving deadlines save Christmas? Do you think that's fair?
Yeah, I believe that everybody's going to be okay for Christmas at the time, but I couldn't agree more with Kareem. You know, we actually have gone to him to advise us on a lot of our Shark Tank companies and some of my larger companies as well. And that's exactly what you have to do. You see, you know, even 20 years ago, I was manufacturing in Guatemala and then China. You know, factories in China, due to the communist environment, they open and close just as fast as, you know, as anything else. So, yes, you should be right now, you know, really working with the manufacturer. You have Christmas and holiday will be, I do believe it will be okay at the moment. And most of the entrepreneurs and businesses make anywhere from 50 to 90 to 75% of their business there. But you do have to find alternative ways, whether you are shipping in pieces and then assembling here, going to Africa. I went to Africa with President Obama, and as of 10 years ago, that was the goal, was to open up Africa, and the opportunities will come from Africa.
Right.
Now they're getting into a good position. So absolutely, I do think holiday is okay at the moment, but do not, you know, don't rest easy. You have to start really putting these things in place.
Overall, Daymond, has all of this sort of churn lessened your enthusiasm for consumer retail? Are you passing on opportunities more now than you were in the past?
You know, consumer retailers don't know who they want to be when they grow up right now. And I do see what I'm seeing. I've been to 56 trade shows in the last year, and out of the 56, 50 of them were 1/3 of the size, because what's happening now, I'm seeing more live selling. People are selling now on Amazon. Whatnot is a new platform that's really been taken on, and of course TikTok. They've been selling directly to their consumers, so they don't have to wonder who purchased it, because there's only 3 ways to deal with the consumer: acquire a new one, upsell a current one, or make one buy more frequently. And you want to supersize everybody's fries once you have them, you know, already a fan of your product or brand.
That's fascinating, these multiple cross currents. Gentlemen, please come back. You guys are a good team, obviously. Daymond John and Kareem Kaffouri. Thank you.